Welcome to Bonex Investment Group. In this video, I'm going to teach you a strategy which actually can raise your accuracy rate, basically following what the market makers will be doing. All that we need is to follow the market maker dealer's hand. So if we see that hand, that is where we want to get involved within the markets. So how do we see those particular points within the markets? I'm going to illustrate this using US 100 on H4 time frame. So the first thing that you are going to require is to have these EMAs installed on your MT4 or MT5. This indicator on the downside is basically a TDI. It actually helps on entries whereby you'll be focusing on confirmation or basically increasing the confluences for you to get an entry. So in this particular case, what we want to see is a crossover of the 1350, which is a crossover of the 50 in blue and the 13 in red. But basically what we want is to get where we call the point of order block, whereby the market makers wants to inject where they've already injected. So those points are actually subjective if you follow all those stuff that you see on YouTube or on other trading context, whereby they would actually say this was an order block, this was an order block, and something of that sort. So basically this is how you simplify those particular points. So the market is going to give you points where you can have these as order blocks with high probability. These points are basically a point whereby the market actually bounces on the 50 or whereby the market actually bounces on the 13 in red. So basically for the purposes of those who are new to this channel, the one in yellow is the 5, the one in red is the 13, the one in blue is the 50, and the one in white is the 200 EMA. So in having these EMAs, they are basically not for prediction sake, but for actually showing you what the dealers are planning. So in this particular case, we had this 1350 EMA cross to the upside. The market went to the upside like that, and then it came back to the 50. This one is the 50 in blue. When it came back to the 50, we can see a very big move to the upside, basically like that. After that had been issued, we now say this particular point is a point of orders where the market makers actually injected several orders into the market that resulted in shift of the supply or shift of the demand of this asset. So in this particular case, we can now derive an order block using the last candlestick after the last red candlestick before a rise. That is what we want to actually see and protrude it into the future. So if we have such a big range of an order block, we want to actually have 50% like this in this particular case. But before we actually move forward, I have another point as well that I want to show you where these order blocks are also derived. So the market actually went to the upside like this, and then on that H4 time frame, we can see it came back to this particular point. So you'd find yourself actually getting trapped and not understanding how the market is actually flowing due to the fact that you do not know where the market makers are injecting their contracts. So in this particular case, this was actually a point where you could have made an entry or a point you could have exited if you had already entered. Right? So in this particular instance, we can see another 1350 EMA cross to the downside, and after that 1350 EMA cross to the downside, we can see the market actually giving us a pullback to the 50 and then a shift. So pullbacks to the 50 actually give us an idea that the market makers are now within the markets. Pullbacks to the 50 as well as pullbacks to the 13 EMA also give us that market makers are now involved within the markets. This was actually the point that we are going to take action due to the fact that we had a pullback to the 50 and we had the last green candle before the drop. So an order block to the downside is the last green candle before a drop has been issued. We can see that this was the last green candle and the market went to the downside, actually giving us evidence that there are huge contracts that have actually resulted in this particular drop to the downside. And then at this particular order block, which was from the previous point, we can see the market actually went back right into this particular zone like this. So from that particular zone, we can as well continue to see what happened. We can see a 1350 was issued, but in this particular case, we had a 13 EMA retest, which was this one. So on this particular 13 EMA retest, that is where I've said you can as well have order blocks sit on the 13 EMA retest. So the last green candle was actually this one that was issued before a drop was issued, so that the market makers could actually add more contracts in that particular instance. 50% was going to be this particular point, and that is where we wanted to actually take action. We can see a reaction from that particular instance was extremely powerful. So in this instance, we can even continue going to the going forward. We can see what happened in this scenario. We had a 1350, which actually confirms our buyers, our orders are flowing to the upside. And then we can now check where was the first touch of the 50. There was no first touch of the 50. Where was the first touch of the 13 EMA? It was right at this particular point. Which one is the last red candle before the rise that was issued? This is the last red candle that was issued. Therefore, we will be expecting to see the market to actually reach this particular price point sometime into the future, and that is where we want to actually take action. So this as well can now be expanded into the smaller time frames. As you've seen that we were actually reacting at these particular points. We had some buys that were going to be issued here. We had some sales that were going to be issued at this particular point, and we had some sales that were going to be issued at this particular point. If we actually view these particular points on the smaller time frames, we can refine them so that they will be much more clearer, actually trying to attain those so-called sniper entries that actually trends in the market. So this was actually the point where we had a sharp drop to the downside. So in this particular instance, we want to get a reversal candlestick patterns, whereby we actually look to get a candle that closes below a high that has been set. So by closing below a high that has been set, we can see we had this particular green candle that came, and then we have this red candle that actually closed, but it failed to close below the low of this candle. But later we got this particular candlestick, and we managed to get a candle that closed below the low of this candle. That was the candle we could have made our entry to the downside, basically like that. So if we continue on the previous one to see what took place here, let me see, to see where the other point that we are going to make an entry was actually at this particular price point. So here within this particular price point, we said when we reach 50% of the order block, that is where we want to take action. But in this particular instance, we reached 50%. There was no candlestick reversal pattern. We went above the 50%, and then we start to look for a reversal candlestick reversal pattern, whereby we are saying its closure must be below the low of the previous candle, and we could actually get any that particular candle in here. This was the first one that we are going to make use of, and our stop loss should always be above the order block, or above structure that is a recent high or a recent low. Same applies at this particular point. In this particular instance, we could actually find that candlestick reversal pattern within. So the other way will be to actually enter at an H1 candle closure below that particular order block. Like in this particular case, we had a drop to the downside, and we had an H1 closure right above this particular order block, and here we had a retest of the order block, and we had an H1 closure below this order block and our stop loss above structure. And then same applies in this particular instance. It's unfortunate this was news driven. This entry criteria was not going to be much more effective. So basically that is what I had for you today. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.